Hi, I'm Kristin Duncan with the Duncan Team in Orlando, Florida with Keller Williams Advantage Realty, and it is currently October 2022. I think we need to do a market update at this point. We kind of thought we were in a changing market. Now there is absolutely no doubt we are in the midst of a changing real estate market. This is not necessarily bad news. Honestly, I kind of welcome it. So let's talk about why and some numbers behind what's going on, some real data. So first of all, prices have been decreasing. That's been documented in July and August of this year, and my gut feeling is we're going to see that continue when the statistics come out for September and October. These are small decreases. These are 1%, little less than 1%, but they are price decreases, and we haven't seen that in a while. The second thing is inventory is increasing. So month over month, July to August, we saw an increase of 3.7%, fairly significant after we have spent months and years of talking about the low inventory. We are still much lower than we should be. Buyers still don't have a ton of choices, but they are definitely seeing improvements. We're seeing a little bit happier buyers. The average days on market, so the average days a home is actively listed before it goes pending, has increased pretty significantly month over month. So for August, the average days is 27 days. For July, it was 21 days. So in just a 30-day span, we saw that jump about 6 days, which is fairly significant. Now, our listings that are well staged, well photographed, marketed well, we're seeing still go in a little bit under 27 days. Again, kind of boots on ground comment, but overall Orlando, we're looking at 27 days. Sales are down between August 2021 and August 2022. We saw a 17% drop in sales. Not scared of this number. This is just the market stabilizing, but again, it is something we should pay attention to. So kind of in summary here, inventory is creeping up, prices are kind of creeping down. Interest rates have held steady about month over month. I mean, we are seeing higher interest rates, but nothing really outside of the realm of normal. We have to keep in mind that those COVID era interest rates that we saw were not sustainable. They weren't something that we can keep around, indefinitely. So we expected this. I'll tell you, I bought a home last month. I closed on an investment property. Had a 7.125% interest rate. I'm going to do a whole video about that, why I chose to buy even with that interest rate. There were lots of good reasons. So some things that we're seeing on our team. So we don't have hard data on this, but again, boots on ground. Here's what we're seeing on the team. Fewer multiple offer situations. Our listings are selling. They're selling in a fairly short amount of time, but we are not seeing the 10, 20 offer situations that we saw over, a year ago, 6 months ago. Builders, this is kind of good news. Builders are back to giving buyers some incentive. They're letting buyers pick out the finishes. We're getting back to a little more normal market when it comes to building new construction. Listings on just a little bit longer. I totally agree with that. Fewer buyers are having to pay over appraisal value, and some sellers are starting to pay buyer closing costs. Again, the house that I just closed on, we got all of our closing costs paid, plus they bought down our interest rate. So we're seeing some things we haven't seen in the past, but I think it's all great news. This is signs that we are returning to a healthy, more stable market. If you have any specific questions, please feel free to comment or send your questions directly to us. I'll be happy to answer. Take care.